you have the smart idea of not doing your taxes to save money or to save yourself from paying taxes, well, that big idea could turn into a big problem. And I would like to make this video to explain to you all the consequences and the benefits that you're missing out if you don't do your taxes. If you don't do your taxes whatsoever, or you don't do your taxes on time, you're going to be facing penalties and also fines and also interest. The IRS has on record the W-2s and all the income that has been reported with your Social Security number. Yes, the W-2 that you get from your employer or the 1099 you get from that job that you're doing, that the information on the W-2 or on the 1099 also gets transmitted to the IRS by your employer, by the company you're doing work for. And the IRS or the tax department in your state, they already know the amount of money that you have earned during the year or the previous years. And it's in their record, it's in their system. And let me remind you, the IRS uses automations in their systems, and also the state tax departments uses automations in their system. And if you don't do your taxes for a number of years, what that system does is does an assessment. And what an assessment is that it calculates an estimate of the amount of taxes that you should have paid based on the information they have in their system. Remember that W-2 or that 1099 that was transmitted to them by your employer or the company you did jobs for. So it's already in their system, and these assessments get done by the system in a way that is automatically and autonomous. Yes, not an agent has to do an audit on you. The system does an assessment automatically, and it will not calculate the possible expenses you had related to your work. It's not going to calculate the possible credits that you could have, that you could be entitled to, like earned income credit, child tax credit, and stuff like that. So you're not going to be able to claim those credits or those expenses and those taxes because the system is going to do an assessment. It's going to do your taxes automatically for you. And then it's not going to be able to calculate none of these benefits that you could claim if you do your taxes yourself. So in that case, your tax liability, your tax debt is going to be way larger than if you would do your taxes yourself with a tax preparer. So I highly recommend for everybody to do their taxes, whether they're old taxes or they're just the taxes for the previous year, but do your taxes as soon as possible. There's a lot of clients that come to my office with a huge number of years of taxes that they haven't done. And before I start doing their taxes, what I do is I call the IRS. Not I call the IRS. I have the client call the IRS to ask them if an assessment has been done on their file, just to make sure that there's still time to do those taxes, and that way it is more beneficial for them. Why? Because if you do your taxes with a tax preparer, you're going to be able to claim credits that you are entitled to, and you're going to be able to report expenses related to your income. So in that way, you're going to pay less taxes on that income. So that's why it is highly recommended for you to do your taxes on time and as soon as possible, and save yourself from penalties, from fines, or from interest that's going to be charged on the tax liability that you're going to have. So a lot of people has the smart idea of not doing their taxes because they think they're going to get away from paying taxes. They're going to save themselves from paying taxes, and it's totally the contrary. It's totally the opposite. If you don't do your taxes, but you still have a tax liability, a tax debt, after the IRS or the tax department in your state do your assessment, you're going to end up paying way more taxes than if you would when you do your taxes yourself. I highly recommend for you to do your taxes, whether you're going to end up with a tax liability or not. If you're going to end up with a tax debt, call the IRS and start a payment plan with the IRS. I've seen cases where people have a large tax debt or a tax liability with the IRS, and they call the IRS, and the IRS are very, very, very flexible with a payment plan. People end up paying $200, $300 a month with a huge tax debt because if it looks like the IRS wants to help them pay. by giving them flexibility and options to pay. So I highly recommend for you to do your taxes. And that smart idea that a lot of people have, not to do their taxes to avoid paying taxes, is not the best one. So I highly recommend for everybody to do their taxes. Even if you have a few taxes from a few years ago that you haven't filed, the smart thing to do is to go ahead, call the IRS to see if they haven't done an assessment on you. And if they still give you the opportunity to do those taxes for previous years, the smart thing to do is to do those taxes as soon as possible and save yourself from paying higher penalties and higher interest. So I hope this information is very useful for you. And I really like for you to click the like button and share this video on your social media or with other people that this information can help. With you, Franklin Mendez. See you on the next one.